there we go. So Steve Bragg is a senior advisor with MC Advisory. Most recently, Steve was the chief operating officer for one of Atlantic Canada's largest law firms. Steve has worked for 20 years in public accounting, where he was last a partner at Deloitte. Steve has over 15 years of experience in valuance and M&A consulting. Born and raised in Newfoundland, he is proud to call Newfoundland and Labrador home. Steve has been awarded the Renat E. Withers Community Support Award in 2019 for his outstanding contribution to Eating Disorders Foundation of Newfoundland. In 2018, he was named Paul Harris Fellow for his contributions and commitment to the Rotary Clubs of St. John's East. And Steve is also an avid golfer, curler. He enjoys barbecuing, music, and most importantly, spending time with his wife and his young daughter. It is now my pleasure to turn the floor over to Steve. Steve, welcome. Oh, do you want me to unmute? There we go.
Sorry about that. And I'm going to try to share my screen here. This is the wonders of technology. Just give me a second here. Now I'm going to share. All right, I'm assuming we're good to go there. You can see that okay? Well, first of all, thanks, Jude, for the nice introduction, and thanks for the opportunity to be able to speak to the Fredericton Chamber here today. I actually spent some time last week in your neck of the woods. I was in Fredericton last Wednesday, I believe it was. I was throughout Nova Scotia and New Brunswick, and just nice to be out meeting with people, and glad to have this opportunity. So perhaps I could just give you a very quick background on, Jude has alluded to my background, but just how I ended up here and what we're doing at MC Advisory. So as Jude said, my background, I'm a CPA by trade and a chartered business valuator, and worked with Grant Thornton, articled with Grant Thornton, got my CA back in the late 90s, CPA now. And in around 2004, I moved into the world of corporate finance and took over the corporate finance practice for Grant Thornton Newfoundland. The majority of my work was valuations, valuations for tax, for shareholder disputes, for transactions, did a number of transactions, people buying and selling businesses, some due diligence, etc. And in around 2010, I had some friends here at Deloitte in St. John's, and Deloitte was all over the market, doing a lot of very interesting things. They convinced me to make the move, and I moved to Deloitte. I spent 8 years at Deloitte and became a partner there early in my tenure, and doing similar sort of work. But one of the things I realized when I moved to Deloitte, and I still have a lot of good friends at Deloitte, I moved a little upstream, and I found myself doing a lot of public company out of the assist work, and I was doing a lot of work out of Toronto and goodwill impairment testing, still doing some transactions and valuations, but wasn't working as much with owner managers, which I really missed. And so I was 20 years into my career, and I thought, I could move to another firm, or maybe it's time to rebrand myself. And so I did. And I took the role of Chief Operating Officer at Cox & Palmer about 4 years ago, and really enjoyed that, had some great experience. I think that's going to make me a better consultant as I move forth, because I was really into the weeds of the operations, dealing with a lot of HR issues. But as I moved through my tenure at Cox & Palmer, I realized I missed client work, and I missed market development, and I missed working with owner managers. And I got talking to the crew at MCA, and if you're not familiar, MC Advisory is a consulting firm that's been spun out of McInnes Cooper, and it's really a boutique firm. And at a very high level, the firm was planning to launch this firm back in March of 2020, and they'd done research for a couple of years. And we all know what happened in March of 2020. Things went sideways in the world, and so they delayed the launch and finally formally launched in January of 2021. The firm is really focused on 3 areas. Public sector, which I think we're still trying to figure out. There were a lot of lawyers doing government work, but it's hard to tackle the public sector with a smaller team. So kind of put that more to the side. And then there's two other areas the firm is focused on, and that's people and culture. And we're doing a lot of work in that area. One of our things that's flying off the shelves is HR as a service, which is really an outsourcing of your HR. We're doing some pay studies, diversity inclusion work. We're looking to get into recruiting, etc. And then there was this business growth and legacy piece, and that's where I come in. I'm leading that for Atlantic Canada. And when I started to talk to Kevin Kiley, as some of you may know, who's the CEO of McInnes Cooper, and Drew Barber, who's the managing director, I got really excited. And the firm was really focused on, helping people transition their existing business, carry on their legacy, or helping people buy business. And also being a chartered business valuator, I'm doing some business valuations. But over the next 15 to 20 minutes, and I like to be in a room, I like to use my hands, I like to walk around. I'm at my standing desk here. I'll do my best to keep your attention, but really focused this presentation on people who are contemplating the sale of a business. Just give you some high level thoughts. If you can take one or two things from this presentation, that if you're in that situation and it helps you, then I've achieved what I wanted to achieve. And on the flip side, if you're someone who's contemplating buying a business, this may give you some interesting insight into what a seller might be thinking when they're selling their business. And then I'm happy to have a discussion and answer any questions after the presentation. So I'll work to get through this so we can answer some questions. So first of all, this is my daughter, Bridget. This is the love of my life. She's 8 years old. She'll be 9 next Friday, April 30th. I think that's right. Or next Saturday, sorry, April 30th, she'll be 9. And before I took this role, I took a couple of months off. I resigned from Cox and Palmer, and they didn't want me to start till September. So they said, was that okay? And I said, sure, it's okay. My daughter's going to be off for the summer. My wife works at the school. She's going to be off for the summer. So it was a good opportunity to spend some family time. So this was on a daddy-daughter day. And incidentally, my daughter was born in April. She was born around Masters weekend. And as Jude alluded to, I like to golf. So her middle name is actually Augusta. Which might be an interesting trivia point for you. But we were playing mini golf, and she looked up at me and she said, Daddy, what are you going to be doing in your new role or your new job? And I said, honey, I thought about it for a minute. And I said, I'm going to help people buy, sell, and value businesses. And she looked at me and she kind of said, what do you mean by value their business? And I said, well, basically tell them what their business is worth. And with that, she went ahead and putted the ball. And I kind of took this picture because it was a good thing for me moving in to start at MC Advisory. There was my tagline. If my 8-year-old daughter could understand it, then I figured that's something that I could bring to the market. And that's really what I'm doing at MC Advisory across Atlantic Canada. So I will say I like to have a conversation. There is some content in these slides. Again, really the theme is maximizing the sale price of your business. And, for most business owners, your business is your most valuable asset, and you've worked really hard and to build that business. And this is going to fund a significant amount of your retirement. So you want to make sure that if you're going to monetize that asset, you do it properly and you take the right steps. So I just want to provide you with some ideas, food for thought in terms of the sale of the business. And again, any prospective purchasers out there may be interested in hearing this as well. So when you talk about small business, and that's kind of the area that we're focused on, I really like the owner managed business. I ran some of these numbers, and this is as of December 2021, so very recent. Almost 26,000 businesses in New Brunswick. About 87% of those are employees, are businesses with employees of less than 20 employees. And because I'm a financial guy for fun, I took the midpoint of the range of 1 to 4 people. I took 2.5, and then I took the midpoint to 5 to 19. And I did a quick calculation, and I came up with a number of about 140,000 people employed in this sector. And, you know, when I look at the workforce in New Brunswick, that really reflects about 1/3 of the workforce. So when you look at small business in New Brunswick, and interestingly enough, it's kind of a similar story in Nova Scotia, Newfoundland, PEI. Small businesses really drive the economy. So I think that's a really important thing, because that's kind of the market that I love to play in. In terms of the presentation here, just a couple things I'm going to talk about. I'll give you some high-level trends in the M&A market. If you're a business owner, why should you have an exit strategy? A couple of steps in the sale process, a few things that you should consider. Who could buy your business? Quickly talk about business valuation and valuation enhancement, and then talk about our process, and then get into some questions. So this was direct from the Atlantic Provinces Economic Council, and I heard David Chande speak in January of 2021, and this is kind of when the light went off for me. And he estimated that 25,000 businesses would transition in the next 2 decades in Atlantic Canada, and that's a big number when I heard that number. And this is really interesting as well, and it speaks to our demographic in Atlantic Canada. 30 years ago, there were 20 young workers entering the workforce and 10 leaving. So 2 for every 1 person, you know, leaving the workforce, retiring, etc. Now in Atlantic Canada, there are just 7 people entering the workforce for every 10 leaving. Not enough to even cover the amount of people leaving. So that brings in a lot of interesting dynamics. And I've seen a trend here now in Newfoundland. I know a number of people here in Newfoundland who are working for companies either outside of Newfoundland or outside of Canada. And so it creates some interesting dynamics in the labor market, and it also speaks to our aging demographic and the business owners out there. There's no doubt when I talk to other advisors, and I've talked to some business owners, that people are shortening their timeline to sell their businesses. The last 2 years have been really tough in terms of COVID. Some businesses have done better, but the lion's share have struggled. And a lot of business owners who were thinking about selling in 5 years from now, 4 years from now, are thinking about now or in the next year or two. They want to, after struggling through this COVID pandemic, they want to get down and get on a beach somewhere and retire, or whatever the case might be. So that trend is definitely occurring. There's more business owners who are shortening their timeline. The other thing that's interesting is that family transfers are declining. There seems to be an increasing trend of kids not wanting to establish or not wanting to take over the business. They want to establish their career elsewhere. They want to be an architect. They want to be a teacher. They want to be a lawyer. They want to be an accountant. Whatever the case might be, they've seen the parents operate the business, and they just don't want to go down that road. The other thing with respect to that is that people are having less kids. So, between the kids wanting to do something else and people having less kids, that's almost eliminating an option for a lot of business owners in terms of the transition of their business. There's no doubt that due diligence is definitely getting more comprehensive, and particularly around COVID-19. People want to know, if the business was doing a certain level of EBITDA, which is earnings before interest, taxes, depreciation, and amortization, and it's declined during COVID, is that representative of what's going to happen on a go-forward basis? On the flip side, if you've had some good years because of COVID, is that representative? So they're really digging into the long-term sustainability of the business's cash flow. They want to know, in terms of the government funding, the programs and the subsidies that have been received and how that impact the business. A big thing as well for COVID-19, a lot of business owners had to make some tough decisions in terms of their staffing, and they had to make modifications. And then they learned about their business and the fact that maybe they could operate the business a little differently. Well, purchasers want to know what are the impacts of those staffing modifications as we move forth. There's definitely more use of deferred compensation to match seller price expectations. So there's no doubt a lot of business owners have a certain sense of value in terms of where their business is. And a lot of times that's significantly higher than what purchasers are willing to pay. So in order to try and bridge at least some of that gap, what we're seeing is a lot more vendor financing, and even in the case of some transactions, earnouts. And so vendor financing, a vendor take back, if you will. To keep it very high level, you're going to sell your business for $1 million. Well, the purchaser might say, I'll tell you what, I'll give you 750 up front, but I want you to finance the $250,000. So you're effectively providing some equity for the purchaser, and you're not going to get paid for a bit. And typically the banks require some deferral of principal on that loan, effectively that loan that you're making to the business owner. A lot of times it's a 2-year minimum. When we're doing a deal, we try to get that vendor note paid out as quickly as possible. But a lot of times it's interest only for the first couple of years. And sometimes people will try and stretch it out even to, a bullet payment or a payment of the loan 4 or 5 years out. So that is definitely a trend that's happening. The other thing is what we're seeing is sometimes there's an earnout. So let's use that $1 million business example again. Now the purchaser says, I'll tell you what, I'll give you 750,000. You hold a note for 150,000, a vendor take back. The remaining 100,000 chunk, we're going to do an earnout. And what an earnout is, you're telling me the business is doing a certain number of EBITDA. Well, in the first year after I buy that business, I need the business to do that level of EBITDA. And if it doesn't, you're not going to get your $100,000, or maybe the $100,000 is ground down depending on what level of EBITDA the business does. So that's something that's often used to try and bridge the gap between the seller and the purchaser's price expectations. Financial institutions, banks, they've increased their risk profile, I guess, in terms of their lending requirements. So there's an element of that. Having said that, I've talked to a number of bankers in the past several months, and there are a lot of bankers out there who are hungry to do deals, which is good news. And despite all this doom and gloom that I've kind of presented, there is good news. There are purchasers out there who are seeking to acquire businesses. They really want the juicy opportunities, but there are purchasers out there. So if you're thinking you're thinking of selling your business and you don't think there's anybody out there to buy your business, there are people who are out there looking, and I'm aware of a number of parties throughout Atlantic Canada. I'm a big sports guy. I'm not an auto racing fan, but I love this quote. I'm a sports guy and a quote guy. And this is Bobby Unser Jr., who's a 3-time champion of the Indianapolis 500. And great quote: success is where preparation and opportunity meet. And if you tailor this to talk about selling your business, being prepared and then getting the right opportunity can really maximize what you receive when you sell your business. So why should you have an exit strategy? Well, first of all, there are purchasers out there, but it is a competitive market to get those purchasers. Already, I've told you there's less intergenerational transitions. So that may be one less option that you have. There are more options, as I noted, for people to work outside of, or in the workforce, to work outside of owning their own business. And that goes back to the stat that I gave you, that there's not enough people entering the workforce to fill the people who are leaving the workforce. So that's an issue. People have opportunities for employment, and I'm sure many of you out there have tried to hire people in the past several months, and it's an employees market right now. Employees have choices. They're looking for a number of different things when they're looking at a job, and they seem to hold a lot of the cards. So that's creating a competitive market from a purchasing standpoint. And as I indicated before, there's no doubt that purchasers are exercising more scrutiny when they're looking to buy a business. So it's important to have a strategy as to how you're going to go to market. Like I said, the purchasers, they want the strong, juicy business opportunities. This is critical. to have an exit strategy, you need to be thinking about the tax considerations. And I am not a tax expert. I know enough to be dangerous, and we utilize tax specialists when needed in terms of helping people plan for their sale. But price is one thing in terms of selling a business. What you get at the end of the day and you take home after the sale, that's an entirely different beast. And there are things you can do to maximize what you do take home. I'm sure many of you are aware of the lifetime capital gains exemption. And if you're not, on a very high level, I have it, Jude has it, Morgan has it. We all have a lifetime capital gains exemption of almost 900,000, 892,000 in 2021. Effectively, when you sell the shares of your business, if your business qualifies, you are eligible to get up to $900,000 tax free. Now think about that. If you and your spouse own the business or significant other, and you both haven't utilized your capital gains exemption, well, now all of a sudden you can get $1.8 million tax free on the first $1.8 million of the sale. That's a lot of money. Just to kind of frame it up for you, the 900,000 is taxed as a capital gain. You pay about 25%. So you're talking, you're basically saving a couple of $100,000 in tax per capital gains exemption. So I go back to the example. If you and your spouse are selling a business and you sell it for $3 million and the first $1.8 million is tax free, if your business qualifies, you've just saved $400,000 to $500,000 in tax that's gone in your pocket and not CRA's. That's a lot of money. We had an example, and just to give you an idea how important it is to plan, the client come into our office a few months ago, and we don't do any year-end work or tax work, compliance work. We're solely, M&A advisors. So they came into one of the lawyers in the office and they wanted to sell their business to a key employee. So they gave me the financial statements. I looked at it and I said, oh boy, we got a problem. And it's a good problem to have, but they had a ton of cash in the bank. And when you have a ton of cash in the bank and it's just sitting there in your bank account of your company, it's considered an inactive asset. And there are tests around the lifetime capital gains exemption, which are centered around active and inactive assets. Very high level. By having that money in the bank, it throws our client off. They can't sell and get their capital gains exemption. So they're going to have to wait 2 years, and they're going to have to purify the company. They're going to have to get that money out of the company and then wait 2 years till they can sell it to the key employee to avail of that lifetime capital gains exemption. So very important. Just with respect to that, you've probably heard the term family trusts. And I don't set up family trusts, but they are a very beneficial thing. When I talk about the capital gains exemption, we're working with a company now that they've set up a family trust. So they're able to avail of multiple capital gains exemptions. On the family trust is the husband, the wife, the 2 children, and the in-laws. So the parents of one of the spouses. So they're able to avail, if they sell their business because of this family trust setup, of 6 capital gains exemptions. So think about that. If they sell their business for 10 million, the first 5 million they may be able to avail of tax-free. When you look at 6 times 900,000, that's 5.4 million. Very important. And again, back in my Deloitte days, I remember working, and there was one client that actually availed of 13 lifetime capital gains exemptions to their family trust, which meant you do the math, 13 times 900,000. That's over $10 million tax-free on the sale of their business that they wouldn't otherwise got if they hadn't put those structures in place. So very important. Again, when you put a family trust in place, you got to wait 2 years. There's a 2-year waiting period. Maybe you own a business right now, and I'm not sure how good your relationship is with your significant other, but maybe you might want to think about your significant other has this capital gains exemption available and you want to bring them in as a shareholder. Well, you can do that to get the 2 capital gains exemptions, but again, you may have to wait 2 years. So there's a lot of tax planning that can be done to really maximize the amount of money you take out of the transaction. Super important. That's why it's important to have an exit strategy. And then there are other things that you can do. If you're thinking about selling and you start planning early, we can look at the business now And maybe there are some value enhancement strategies that you can put into play to enhance the value when you sell in 2, 3, 4 years down the road. We can also start the process of developing some marketing materials on your business, give you some food for thought in terms of documents for due diligence. And just overall, again, going back to Bobby Unser's comments, success is where opportunity and preparation meet. Planning is very critical and can help you maximize the proceeds when you sell. So steps in the sale process, just a couple things to consider. I mean, I've hammered this home, but it's really important. Preparation is key. The current market conditions, there are purchasers out there. You want to be getting in front of those purchasers. They're looking for the good opportunities. So having your business in a good place makes it more attractive to prospective purchasers. Again, as well, from a preparation standpoint, I've hit home the tax planning, how critical that is and how much that can save you from a monetary perspective. Whether it's Steve Bragg or there are lots of other advisors out there and firms, you really should consider using an advisor. And I think an advisor can do a couple things. One is help you understand your value. I sat on a panel last week at the Business Transitions Forum, and on the left, I had Christine Wall, who owns Full Throttle Sports in Halifax, who had done a management buyout. And on the right, I had Don Mills, who owned Corporate Research Associates, who had sold to his management team. And we were talking about management buyouts. And both Christine and Don talked about how critical it was that they first went out and got a valuation done and it had everyone on the same page. So that's very, very critical, understanding your value. The other thing I'll say about that is, I don't like to go to market with a business if I'm not on the same page as the owner. And I learned that one the hard way. We had a business many years ago and the owner wanted to go to market. He was adamant that we went to market and he thought he wanted at least $6 million for his business. And we said, well, we don't think you're getting, we think you're going to get $2 to $3 million. Anyways, he was adamant to go to market. He wanted to go to market. And so we went to market and we got 3 offers. And I think that the highest we could drive someone was $2.5 million. So he was not happy. We had told him this is where we thought he was going to be, but we weren't on the same page. It was not a fun experience. I've learned that one the hard way. So very critical, you understand the value. And if you're using an advisor, you're on the same page when you go to market. An advisor, I mean, we have a network of advisors. I have a lot of friends at a lot of the different firms in my time at Grant Thornton, Deloitte, and I know, all the folks at BDO and MMP and KPMG and EY. I know folks at all these places. And between my network or our network and using advisors, we can build a pretty good prospective purchaser list or find some really good potential purchasers. So an advisor can help you with that. An advisor can give you more time. It's not easy to sell a business. It is not for the faint of heart, let me tell you. I'm working on one that's supposed to close on my daughter's birthday, April 30th. We started it on October the 1st. It's been a long 7 months. And it's not easy. And, I talk to the business owner almost every other day, but at least he's been able to, keep his hands on the steering wheel. And actually this year he is driving significant business. And that's part of when you're selling a business. You got to keep your foot on the gas. You can't, let the business fall apart around you because you're selling it, and having an advisor assists with that. The final thing, and, I'm not telling lies out of school here, but having an advisor will definitely help you maximize the price. There is no doubt when you have the competitive tension and you run a very structured process, you're going to get improved terms, you're going to get more exposure to buyers, and you're going to get a higher price. And the research says, 10 to 20% price increase by using an advisor. And that's significant. You're going to pay your advisor something, but you're going to make additional above and beyond if that's important to you. And just to give you an example, I was doing some work for a business last month in March, and it was a business in Newfoundland, very well-established business. They were looking to buy a company outside of Newfoundland. So the CFO is a very bright guy, and we sat down and we put together a letter of intent, and we decided what we were going to offer. And our offer, there was no vendor take back, there was no earnout, it was all cash, uh, with the exception of 5% being retained to fulfill the net working capital requirement, but all cash on close pretty much. So we made the offer, and when I spoke to the advisor, effectively, we weren't even in the ballpark, which was extremely surprising to me because it was a very big offer, very healthy offer. So, from speaking to the advisor said, you're probably going to have to get out of the comfort zone of where you want to be if you want to buy this business. And I talked to the CFO, and we were kind of at a certain point. So I kind of put that file off to the side of my desk and felt it was over. I got a call about a week later on a Friday afternoon. He said, Steve, we want to make another offer. I said, really? I said, what do you want to offer? And he told me. So they upped the offer by 21%. And bear in mind, we already had a significant offer in play. I said, are you sure you want to do this? They said, absolutely. I said, I don't even know if that's going to get us there. So we presented the offer and we still didn't get there. My point being, this company went outside of its comfort zone. It really wanted this business, and there was some competitive tension. There were others at the table, and they were willing to significantly increase their offer. So when you have that process going on, there is no doubt in my mind it drives the price. We always say, if you're approached by one purchaser, don't show your financials immediately. You might want to then think about, if you're really serious about selling, talking to an advisor. And we say don't talk to one purchaser. That's if you want to maximize the price. If you're talking to someone and you feel that they're going to be the right fit and it's someone that you want to take over your business, well, some of that happens. There's no doubt about that. But if your goal is to ultimately maximize what you receive, you should talk to more than one purchaser. Just a couple thoughts, so we can move into the question period here. So who could buy your business if you're a business owner? Obviously, there's children, and I've said that's not happening as much, but for some business owners, that is an option. What's interesting is that when you used to buy or sell a business to your kids, and you do what's called an estate freeze. And again, I don't want to get too technical, but on a high level, let's say your business is worth $2 million. Well, you transfer your business to your child for $2 million, and you effectively act as the bank. You take back preferred shares equal to $2 million, and you redeem those out over time. So maybe you redeem 200,000 the first year and 300,000 the second year, whatever the case might be. But of that 2 million, when you're redeeming those dividends are taxed as if you took a dividend out of your company. And on that, any value above the 2 million, goes to the child. Well, now, last year, Bill C-208 came in and his receiver will assent. Now you can transfer the business and do the estate freeze to your kid, but I think it's done in the form of a note, which means this Bill C-208 allows you to transfer the business to your child and avail of the capital gains exemption. You never could before when you transferred a business to your child. So it's a very interesting development. If you're in that situation and you're looking to transfer your business to your child, you can avail of the capital gains exemption. You don't have to be subject to that dividend tax anymore. And we have tax people in-house at McInnes Cooper who are doing a ton of these. So that is one option. Another option, I alluded to it, that I was on a panel, management buyout. A lot of owners feel comfortable and go this route. You're not going to get the highest price. And Don Mills sat next to me and he said unequivocally, 100%, I took less for the business, but I wanted to reward the people who helped me do well and help build my business. But that is an option in terms of a management buyout. The only thing I'd say about a management buyout, and I'm dealing with a guy now who was part of a management buyout less than 2 years ago with, I believe, 5 other people. And he said, I wish someone told me 2 years ago that I shouldn't have gotten into business with 5 other people. So if you're going to do a management buyout, the ones that I've seen, and I'm not saying they can't be successful, but the ones that I've seen be successful are like 3 or less. And that's just from my own experience, not to say more can't work well, but more people, sometimes more problems. Also, when you do a management buyout, And Don Mills again said it again publicly. He said, I helped finance the transaction. I did a vendor take back, which is one of the things I talked about earlier in the presentation. The other potential buyers, could be a financial buyer. Maybe Steve Bragg or Jude Curry wants to buy your business. Well, they can certainly buy your business. They may not have the knowledge of the business. They may require, as I talked about, a vendor take back or an earn out, and they're probably not going to give you maximum price. Where you are going to get maximum price is what we call the strategic buyer or the special purchaser. And that could be like a customer, could be a supplier, could be a competitor, someone who can really take the business and maybe has a similar business and can generate some synergies and make it extremely more profitable and is willing to pay more. Or what we see a lot, and we are seeing a lot, and again, I refer back to Don because it was a pleasure to be on the panel with him. He sold his business, he said, to the management because he wanted to keep the business in Atlantic Canada. He wanted to keep the ownership in Atlantic Canada. But a lot of times we're seeing strategic buyers from outside Atlantic Canada who want to get into Newfoundland, or they want to get into New Brunswick or Nova Scotia. And so they're willing to come in and they buy a business for a significant amount more than either a financial buyer or a management team would pay. So if that's your end game, that's your goal, and you want to maximize your price, then you need to be looking at strategic buyers. Just a couple more slides here. Business valuation. It's been said that business valuation is an art, not a science. I said, one of the big things is you should get on the same page. There's a lot of professional judgment in a business valuation, and we use the definition. We have to value within certain parameters at the highest price available in an open and unrestricted market between informed and prudent parties acting at arm's length and under no compulsion to act expressed in terms of money or money's worth. So basically saying it's a utopia. No one is under any duress to sell or buy. It's all done in cash. Effectively a definition that rarely ever happens, but that's what we have to value in when we do evaluation. And at least evaluation gives you a yardstick. When I do evaluation for someone, and anyone does really, you get your valuation in a range, but I also then try to supplement it with some industry metrics and rules of thumb. It might be a percentage of sales. It might be a multiple of EBITDA or whatever the case might be, just to give the owner some idea of what's happening in the market. At the end of the day, value and price are two different things, because I can do evaluation, but there may be someone who, like a strategic buyer, who's willing to pay significantly more, but it's still good to give you some context as to where you stand. And I think that's an important point. The big question that I get asked all the time, Steve, like, how do I make my business more valuable? What drives value? Well, just on a very high level, a couple of things to consider. Number one, cash is critical. At the end of the day, EBITDA, which I've talked about before, earnings before income taxes, interest, taxes, depreciation, and amortization. And you may hear in evaluation multiples of EBITDA, but at the end of the day, if your business is generating more cash, that's more valuable to a prospective purchaser. The second thing I hear all the time, and I said the purchasers are looking for the juicy opportunities, is a strong management team. A lot of purchasers that I know, not all of them, but they want to buy a business that can stand on its own, and that, the owner, if the owner goes to Florida for 3 weeks, the business continues to run just like it was running as if the owner was there. So having a strong management team and having your business in a position like that is very critical. Stable income is important. I recognize in some industries that's more challenging. I use a couple of examples, like a car dealership, pretty stable income, relatively speaking. Construction business, it can be up and down with the nature of contracts. And I'm not saying construction businesses aren't appealing to a purchaser. I'm just saying a stable income business a lot of times is something that purchasers look at. They also want businesses that have growth potential and have good potential within the industry. Also, a business that has a high barrier to entry can be more valuable than one that, Jude and I could finish this call and talk together and start a business in 2 weeks from now. They want the business that have high barriers to entry, that may be costly to enter or challenging to enter for whether it's regulatory or whatever the case might be. Goes without saying that having key contracts and a good customer list is very important. This is an interesting one. Long-term leases in place. Maybe COVID has changed that a little bit when it comes to office space, but still, purchasers like to have cost certainty, and having long-term, cost structures in place when you know what they are makes it easier for a purchaser, and they can be more comfortable with that. Capital expenditure requirements. Like, is it a business that requires a ton of capital, fixed assets that you have to invest in year over year, or does it have a low capex requirement on an annual basis, and you don't have to invest a ton into equipment every year? The lower ones sometimes can be more appealing. And finally, and this one is very important, super important on this list, good financial reporting and accounting. Nothing scares a purchaser more. It's kind of the first impression thing if they go into a business and the financial records are in disarray. So this is critical. Like, if I'm buying a business and what are we, April 21st now, and I ask the business owner to peel me off a March 31st, 2022 monthly income statement and balance sheet, and they can't do that, then I get a little concerned. And I get even more concerned if they can't do that right now for March 31st of 2021. So it's very, very important that you have good financial reporting and accounting, because you only get a first chance to make a first impression. And if someone goes into your business and your financial reporting and accounting is in disarray, then there's concerns about other things. And I go back to the capital gains exemption. To get the capital gains exemption, you have to sell the shares of your business. A lot of times a purchaser will want to buy the assets and not the shares. And why they want to buy the assets is if they buy the shares, they're kind of inheriting maybe some of the skeletons in the closet in terms of the company. So if they see that you don't have great financial reporting and accounting, and then there's concerns about, potential audits from years past and that sort of thing, it sets things off on the wrong foot. So very critical to have good financial reporting and accounting. Just at a very high level, if you're wondering, we have a process, and one of the unique things that we can do is we can take a transaction from effectively start to finish. We can do the planning with you and help you understand your value. We can do the marketing document, what we call a confidential information memorandum, which is a summary document on your company that we can send to prospective purchasers. We can help you develop purchaser lists. We can help you find purchasers. We can help negotiate the deal structure. And in the one that I'm working on now, once we got to one purchaser, after we gone through the whole process and we started refining the letter of intent, I brought a lawyer in from McInnes Cooper, and now she is taking that file home to close it. So effectively, we took the transaction from start to finish. I typically tell people 6 to 9 months. Maybe it might happen sooner. Sometimes it can be longer. But to sell your business, that's why planning is so important. It's really hard to sell a business in a month, and it very rarely happens. So just want you to be cognizant of that. So I will leave it there, and I'll just say, if you're a business owner, what's your exit strategy? I think you should be thinking about it if you're contemplating a sale. And there's my contact information, and I guess perhaps I'll turn it over to Jude and Morgan at this point in time, and be happy to try and answer any questions that people may have.
Hello. That was incredible. I've had a couple questions come in. So the first one, it's referring back to the family trust that you were talking about. And it says, are there any policies / tax reasons for the decline in family transfers in addition to the reasons that you have already outlined? And we're just thinking of an advocacy perspective.
Yeah, not that I'm aware of. I think that Bill C-208, and thank you for the question. I think the Bill C-208 is going to help that. And I know, I got a couple of friends who are in family businesses, and now they feel it was a big win for intergenerational transfer to have Bill C-208. So they were happy about that. But in terms of the decline, I think a lot of it is just kind of what I alluded to. There are a lot of kids now, lifestyle, and I think a lot of people have thought about where they are in life over COVID in particular, and lifestyle is very important for a lot of people. And there are a lot of kids who have watched their parents operate a business, and my dad, God rest his soul, is he operated his own real estate company, and that wasn't for the faint of heart. Operating your own business, I've seen that. So I decided not to get in the real estate business, but I think a lot of it is just kids want to make their own tracks in the sand right now and kind of do their own thing, and running a business is a 24-hour, 7-day a week sort of venture, and it seems to me people are more focused on lifestyle versus that.
Okay. So what pandemic trends are you seeing related to business succession?
Pandemic trends. I mean, I think the biggest trend for me is that people are looking to sell sooner. That's the biggest trend for me. It's been a rough couple of years, and I know, here in St. John's, we had Snowmageddon in January of 2020, 2 months before the pandemic hit, and that was we were in lockdown for 8 or 9 days, and people thought the world was ending. But a lot of business owners suffered from that, and then we move into the pandemic, and it's been one thing after another. It's been close the business, open the business, close the business, and a lot of funding and stuff like that. So I think the biggest trend is that people want to sell quicker. And the other thing is, there are some people out there who are thinking about their careers and are thinking they want to buy a business versus work for someone else too. So I think that's why there's a number of purchasers out there as well. And I think they're the main trends that I've seen.
So how will the recent changes in interest rates change buying and selling?
Yeah, it's a good question. I think, in terms of the interest rates, they're obviously increasing. I know I just got my mortgage statements and saw where the rate is. So I think in terms of that, if people are getting, if people are trying to buy a business with financing and the cost of financing is going up, that's when it's going to drive people more to trying to get the vendor to do some of the financing. And that's probably when it's going to gravitate more towards the earnouts. So I think that's definitely one impact of it. In terms of the interest rates, is that with a higher cost of borrowing, people are trying to, they're trying to buy a business with as little of their own money as possible, and also do it as cost effectively as possible. So I think that's even going to drive the trend more in terms of vendor takebacks and earnouts.
And then what benefits or challenges do you see for newcomers to buying a business?
Yeah, no, that's a great question. I would say a couple of things. Number one, obviously you have to have the capital to do it. And if you're trying to buy your first business, depending on how much capital you've amassed, that's a bit of a challenge. And number two, there are a number of purchasers out there, and they're big, and they've got substantial funds that they can allocate and resources to help facilitate purchases. So I think a combination of those two things make it a little more challenging. Not that anything is not possible, but that makes it more challenging for a new purchaser coming into the market. What I do always say to someone who comes to me and says, Steve, I think I want to buy a business. Well, the one thing I would suggest, and I've just said, if you're a seller, don't talk to just one purchaser. But if you're a purchaser, like if you're waiting for someone to hang a sign on their, business that it's for sale, and that's how you're going to get a business, you're going to be a long time buying a business. What I always say is figure out what type of business you want, figure out the industry that you want, maybe the size of what you want, and see what kind of financing structure you can have in play, and then go approach a business and ask if they're if it's someone who you think is looking at a succession and maybe they don't have kids or a plan in place, that's what I always say is the best thing to do if you want to buy a business.
I realize that I have been asking all the questions that were sent to me, but if any of our attendees would like to just raise their hand if they have questions, please feel free to ask your questions now. Well, if there are no other questions, I just want to thank you so much, Steve. This has been very informative. I don't have a business, but I now want to sell a business. So you nailed it. Thank you so much for your time. And I see there's some thank yous in the chat box. And I just want to remind everyone on the call that on June 8th, we will be having our first in-person networking event at the Kingswood Radisson Hotel and Suites. So it's a summer biz bash. And we would love to have all of you attend. Again, free to all of our members, and it's in person. Whoop, whoop. But if you want to have any final thoughts, Steve, go ahead, sir.
I just say thanks, Jude, for it's been a pleasure working with you over the past month or so in preparation for this. And I just want to thank everyone for taking some time out of their day. Hopefully I give you some information to think about. It's tough talking to your computer screen in your house, but I hope tried to keep it informative and really appreciate your time today. And by all means, at any time, I'm always available for questions or to have a brief discussion if there's anything on your mind. Happy to do so.
Awesome. Thank you again so much. And I hope you enjoy the rest of your day, and everyone have a wonderful day.